brought that stock up on Monday, and I ended up talking about something else. But, because I just felt like I was going to be a broken record if I talked about that. I mean, it is tough times in luxury land, but
savage.
That is, I was going to say they're the worst house on a bad block, but they're actually the second, worst house on a bad block, because I think when we hear from Burberry, they're going to be like, "Hold my beer, Kering." But but I think it's two things that's going on there. It's the it's obviously the exposure to China. Gucci was tremendous in China, and then the other thing that's going on is I think that was really one of the brands that got a lot of aspirational customers. So it's just insane, but people were using their stimmies to buy luxury goods. And, so a smaller Gucci bag, a Gucci belt, it just, all of that, people trading into sort of the lower, 1,000 to 1,500 price point items that they have, with their stimmy money. And that's obviously all dried up, and then on top of that, they're going through a designer change. And I don't think, Sabato Sorno's really, hit his groove yet, or who knows if he will.
Or even gotten product to the shelves yet. That's the worst designer change. It's like it was like it came as a surprise to them. I mean, that was what was weirdest about it, as just kind of a tourist in the stock. It's like, well, how do you bet on these guys when they're basically like, oh, art people are just kind of designing things and it'll be on the shelves someday. Okay.
But I mean, it just goes to show that, there's just so much more diversification in LVMH, and it's really benefited them. I mean, the booze business is not good now, but, historically that's been a hedge to fashion and leather. But even within fashion and leather, we can't really see anything with the brands. But anecdotally, I would not be surprised if Loewe, which is a much smaller brand, is up 100% this year. Maybe it's up 50, maybe it's up 100, maybe it's up 150. I can't tell you, other than counting Loewe bags, down Fifth Avenue, Park Avenue in New York, streets of Paris. I'm sure, Beverly Hills looks the same way. So, even though it's a smaller brand, you can have something, there's always something hitting, right? Like we've seen that with Miu Miu, which does get disclosed in Prada. Had 100% year and then a 50% year. So LVMH just has more bets, and it's like more like bet it on black or red at the roulette table with Kering and Gucci. So I don't know, just searching for a bottom. It's crazy.
It's a little scary. I mean, it's you hear it from enough companies, and eventually you got to concede that maybe things are not great in China. Like, right? I mean, they're not buying Starbucks either.
Yeah. I mean, I thought it was crazy that Starbucks, not crazy, but like it just goes to show what the new CEO pass means. Because like Starbucks closed green, yesterday.
I was just looking at it. It's up 6 points. It's up 6 points since they basically just said we're just never going to guide to anything again. And we have a new guy who's flying around with a cape, and he's fixing Starbucks everywhere he goes with some sort of super laser vision or something. It was crazy.
Our costs totally suck. We haven't announced a plan to fix them, but the guy did a good job in his last job.
Although, who should hire him is Nike.
You know who did a good job in their last job?
Boeing should hire him.
Mary at Ulta did a great job in her last job, but she did.
She did.
So, we'll see. We'll see. Sometimes it does work, but it's not always the magic bullet. So we'll see.
Yeah, I guess it falls in the couldn't hurt.
Starbucks because of this, but I'm not going long either. Because, I was short it without this guy involved.
Yeah, I'm just making facial expressions at it, just arching my eyebrows and things.
So, I don't know. Russell, David, have you guys, tapered back your Gucci purchases?
So I got out of actually LVMH early. I think it was during when Jay-Z did his second campaign. I think when they started showing Basquiat art in the background of excessive wealth, I said, well, is that really on point right now on a broadcast ad? Is that really on point for what they should be doing? Obviously, amazing company, but I just thought it wasn't the right tone.
It's funny. I had a buy alert under, I think it was 600 on it, and it actually like hit for a minute. And I did one of those things where I actually hit the alert and then didn't buy it and changed my alert to a lower price, which the last time I did that was Airbnb, and it was a mistake, and I should have bought Airbnb, but I don't know, this one, it just feels too soon. So I think they'll come back. But anyway, let's get started. Hello and welcome to the Beats Roundtable. I'm Berna Barchet. Today is Thursday, October 24th, and our group is here and ready to talk the markets. With us today are our retail guru, Jeff Mackey, our healthcare expert, David Maris, and our tech axe, Russell Young. So we're going to start out a little differently today and go on a theme. We're going to talk about the upcoming election. Maybe you heard that that's happening in a couple of weeks. And we're going to talk about the ramifications for stocks in the market and different industries. And then we're going to move on after that and cover a couple of pieces of news, earnings and such from the last day. But I want to kick it to Jeff to help put in perspective, what's going on in the markets and how the election is affecting things right now.
I mean, I think it's priced in, Berna, and good morning to you. Let's put on our political hats as briefly as possible. Listen, I made the point last week. I want to make it again. This time is this time, and 2016 was last time. They're entirely different elections. So we have this Trump trade being priced in because Wall Street being Wall Street, well, we like to go with whatever people are betting on. But you can see, the obviously correlated names. There's the S&P 500, which is screaming higher this year. Banks are already screaming higher. You can see Geo, which is the prison play that is probably the most obvious way to play Trump, and that has correlated almost perfectly. But this is different than 2016. So that's the setup going into the election. Here you can see what we saw in 2016 when everyone got caught flat-footed. And we saw after the election just huge rally, but that was coming off a really depressed base. You can see Geo there, the financials, the market itself was flat. The election caught everyone off guard in 2016 just because the betting markets are almost always right, and they weren't this time. But people betting that there's going to be this huge rally once Trump is elected, well, that trade's already done. By the time you see the smart hedge fund guys are coming on TV and saying that they're getting long, Trump plays and such, it's time to start taking your chips off the table. And I think people expecting a rally are going to be a little bit disappointed. The real risk to the downside are going to be in some of the consumer names if he wins. And from a market-wide perspective, well, if Harris pulls this off, they're going to catch some people wrong-footed. And so at this point, I think you got to take your profits in the Trump-specific plays, whether you're betting in the poly markets with shady Bitcoin operations or however you're choosing to play it, or just fighting in your home.
Mm-hmm. Well, I mean, so on the obvious plays, like the private prisons, the Fannie Mae, the stuff that everybody knows about, it's in there. Do you think it's priced in on maybe some of the less obvious secondary plays, or is it priced in on the stocks that would get hurt, because that's what I'm worried about in my portfolio, because I obviously have a lot of consumer retail companies that are really relying on imports, and I've seen things like Five Below fall off maybe like 5 to 8%.
And then come ripping back, right? And we saw that like Lulu, they're $60-$70 off. I'm sorry, you froze on me there. I don't know if they could hear, but it's what I'm worried about is a name like Lulu. That tariff stuff is real. I still have fever dream nightmares about Wilbur Ross holding a can of soup, talking about how he was going to slap a tariff on it and make it $1 zillion. That was a real impact on those stocks. And so I don't think that is being priced into something like a Lululemon, $60 off the warning low when they came in a little shy and guided to kind of mediocre numbers. The stock has had a huge comeback since then. That's not necessarily positioned for a tariff war. So it's really hard in this election in particular to get your arms around exactly what anyone is proposing, because it's just kind of at this point, tax cuts for anyone who will vote for me is basically the mandate for both platforms. But it's a name like Lulu is going to be exposed. A name like Target, Five Below. If the tariff talk picks up right away, and whoever wins this, they're not really going to have a mandate. But if the tariffs go into effect, those consumer names are going to be at risk. We were talking before we went on air about some of the weakness we're seeing in China. What's not going to help that is a trade war. It just won't. So you're going to add stick to the system. That's going to impact a lot of our consumer stocks in a negative way. It's kind of just a matter of how much of a pass the market's going to give them to look past it, or what we're calling the Starbucks effect.
How
these
are
days.
How are you balancing this in your portfolio? Because there are stocks that, like you've owned Walmart a long time. That's something that's exposed. I forget all the. I think you own On Running. These are stocks that are clearly in the crosshairs. So, I mean, one thing that I'm really grappling with is sort of this exogenous black swan risk around something crazy happening with tariffs versus maybe good fundamentals that you want
good
to own
fundamentals
on a basis.
Exactly. And on, I mean, that's been incredible. Taking share, we're going to get a look at them in Decker's, Skechers doubleheader tonight. I know the folks at home are excited about those two stalwart shoe companies, but that'll give us a little glimpse at On. We can see if you still have that Nike tailwind. But Nike's another company, man. It's how am I playing it personally? Well, it's again, we've had a really, really nice rally. We're going into an event that's a 50-50 call, but based on any polls, which are going to be kind of a reflection of what the real odds are. How people are betting on it is clearly Trump, but do they know for sure? Not really. So the higher risk stuff, you pare it back a little bit. Walmart had a new 52-week high. I honestly just try not to look at it, because I own it in taxable accounts. And if you overthink a company growing revenues at 5% and trading at a 35 times earnings, you end up selling and paying a lot of taxes. So just chuck that stuff in a drawer, take some of the risk off, and call it a nice year. I think that we've had huge rallies. Like you say, Five Below's come back a long way. There's no sense getting heroic at the end of the year.
So I'm going to move on to David. It's always a big question with elections. Healthcare, what are you watching for in the healthcare space with the election?
Yeah, so this is going to be a little bit long because it covers so many different areas. But first, let's think about what we've had the last few years. You've had massive underperformance for the pharma industry. So the pharma stocks, the large cap pharma, massively underperformed, essentially flat since the last election. Now, part of that is just because it's post-COVID and the wind down of that. But if you take out Lilly, it's way, way worse too. So if you just look at the large cap pharmas, if you didn't own Lilly and Novo, you pretty much have been super disappointed. So a continuation of a Harris-Biden administration is probably more of the same. And part of the reason of the underperformance was the negotiation of prices and and sort of going after drug prices. There hasn't been a lot of move. On top of that, though, on the biotech side, you've seen massive underperformance, and that's mostly because of inflation. And riskier assets do better when inflation's tamed. So I think you can look at it one way of what have we had, and what will the market think is going to happen? What will the shift be? It'll probably be more positive for those industries if there is a change. Now, then let's think about another way to think about it is what are the things that have been proposed or mentioned in speeches and this Make America Healthy Again approach. So we can think that in the previous Trump administration, he tried to streamline some approval processes at the FDA. That's what got us the vaccine in such short time frame. And so that could help the industry. On the other hand, the drug industry hasn't donated to Republicans in an equal amount to the Harris campaign this time around. And the industry was pretty hostile to Trump when he was in office. Just go back to Ken Frazier and how he resigned off of his commission. And so Trump has a long memory. I don't know if that's going to be so great. So I'll take that as a push. I think the market will view it as a positive of a Republican being. Now, what about tariffs? They'll probably carve out tariffs for drugs. Those are important for Americans, and that you wouldn't want to hurt that, especially for drug ingredients coming from India. But that would possibly have a negative effect if they were implemented on generic drug companies. Again, this idea of making America healthy again is getting people the medicines they need as soon as possible. So that's good. So I think that would be good for generics. But the other is also preventative medicine. And we'll get to that in a second. And also anti-vaccine. Now, is RFK anti-vaccine? I know he has that label from statements he made a long time ago. I think that what is going to happen is, if there were a Trump administration, there would be greater scrutiny on what are the side effects of all drugs. So maybe longer term studies on side effects. They're supposed to be, drug companies are supposed to be doing phase 4 studies after approval. Many of the companies just agree to do them and then they never publish the data. I think you'll have greater scrutiny on that. If they do come out of, we're going to cut spending in the government, about $100 billion is spent in the NIH every year. And we benefit from that because it helps bring new science to new medicines, but we don't get any of that money back. In other words, we get it back in longer life expectancy and healthier people, but we also export that to a lot of other countries. So there's been a proposal a number of times of, like, there should be a royalty back to people who use NIH funding, or just a reduction in NIH funding. And so even just a 10 or 20% impact could affect biotech companies a great deal. Now, on preventative medicine, RFK has also mentioned a number of times, we have to look at dyes. We have to look at, any number of things like palm oil in foods. That's going to go against the processed food companies. Will that actually happen? Will Trump stab a great U.S. industry for higher cost cereals? I don't know if that will actually happen. But again, RFK is, if he does help with the election, with this small undecided group that was previously supporting him, Trump will owe him. So I would say processed food companies, beverage companies like Keurig, PepsiCo, Kellogg's, General Mills, all of those companies could be negatively impacted. I think on the energy, the healthcare part of things that has been mentioned a number of times, people don't think of it because they usually think of pharma and biotech. Things like clean water, clean air, those companies, industrial air filtration or water filtration companies, might also be a benefit, because that's a way to spend money and help people. And so I think that's in a nutshell what some of the policies that are proposed. But overall, I think that pharma and biotech will in theory, the knee-jerk reaction will be, oh, they're going to benefit. I think in the long run, it's going to be a lot more mixed than that.
Mm-hmm. So there are a couple things in healthcare that I've been thinking about that I want to get your take on. One is, we know there have been two big themes in the market this year. One is AI and the other is GLPs. And I worry about the GLPs a little bit, because if you go back, there was a long post that RFK made about Ozempic. Now, that is a Novo specific issue. He didn't bring up Mounjaro or Zepbound, which is the Lilly products. But, as a Lilly shareholder, I'm a little worried that, the sort of anti-pharma stance, RFK's post was all about our food supply is messed up. Obesity is a disease, but, it doesn't come out of nowhere. And part of it is our food supply. And, I don't disagree with him there, but, the sort of animosity that he's shown to big pharma in certain situations, and specifically to Ozempic, which he called out as an issue, a Danish company, we're sending all this money to Denmark. But, when you look in, a DCF, trying to figure out what Lilly or Novo's worth, part of that is, some assumptions around better coverage eventually. And the thing that influences corporates to cover these drugs is when the government finally caves and says it goes on to Medicare coverage. And, does a Trump administration with RFK in a key role around health potentially push out the reimbursement scenario for these GLP drugs?
Yeah, so it's such a complicated thing, right? Because it's great to say that, well, the key to obesity is to get people healthier food, and they should be eating more produce, and that should be without any additives and without any chemicals sprayed on them. And okay, so now all of a sudden produce for a lot of working families is difficult because it's expensive and it expires quickly. So the idea now, you're going to have even fewer pesticides and fewer preservatives in things. And now, so things are going to de facto cost more money. Plus, obesity is two type of diseases, I think. One is like, yeah, some people just eat too much. Other people have metabolic conditions. So the idea that, well, we need to do this, we need to change the paradigm earlier on, that's great. But what about for the next 15 years of the people, or 30 years or 50 years of people who have diabetes now and who have obesity? And you just, it's a little naive. I think it's great. It's idealistic. Like, oh yeah, we should be eating healthier. We should get healthier food to people. Um, do I think that eventually that these are going to have to be covered? Absolutely, because the effect is just too great. I mean, it's helping to reduce stroke, cardiovascular events. It's whatever. The cost is too high. So it's like, well, if you know you need a surgery, but you can't afford it, you're in this dilemma. I think we're in that dilemma right now with the spending on GLP-1s of, we know that for a lot of people, it's going to really save money downstream, but we don't want to spend the money. If we wait a few years, we'll be able to get the generics from Novo, or Novo generic versions from Novo. But I don't think that the train is going to turn around and all of a sudden GLP. The only thing that I see as a risk for GLP-1s is that the suicide ideation discussion or other psychiatric effects come in and scare people away from it. Now, again, this is such a long-winded.
Yeah, but that's separate from the election. I mean, I guess I'm more worried about the RFK risk around GLPs. That's the other, that's the thing that worries me. But that it slows down getting to where we ultimately need to go with reimbursement and bringing down prices, but getting the government on board. I want to ask you about one other thing. I think the other thing that is interesting, because we've talked about this in relation to the pharmacy benefit managers, is the one place I think that the Trump administration is going to make a big difference is in antitrust, because it's been such a insanely active period for antitrust, both the healthcare, tech, consumer, all of them. Would sort of the government pulling back on the antitrust front change your outlook on any of the healthcare services companies?
Yeah, so that would be great for some of these drug retailers that own PBMs or insurers that own PBMs. I think that there's a fair likelihood that happens. Now, Khan has been really popular with, the FTC has been popular with both sides of the aisle so far. Now, I could see Trump saying like, hey, that's the one success that they're on the cusp of having. Let's kill that success. Let's not break up these big companies just because it's the opposite of what they were doing. I hope that doesn't happen, but I think there's a real chance of that. Like, you clean, new administration, you clean house, and the head of the FTC is one of those things that, it's a pretty plum job to give to someone. So
mm-hmm.
I do think that,
and then
I do think one other quick area. I do think that there is a chance that telemedicine increases because it's more access to healthcare and it's a way to leverage it. I don't know how they could encourage it more, but I do think that that is a possibility. So areas in which a government can spend more to I think both sides are looking to spend more money to get credit to help people. And so the Elon Musk thing, I think, would be great. I think NIH has an impact there, or would be impacted. But overall, I think that initiatives to get people healthier, it's an easy win because it means spending and it's pro-consumer.
Mm-hmm. Russell, moving on to Russell, thoughts on tech. I mean, the two things that come to mind for me are, what happens with AI regulation, and exactly how worried should Mark Zuckerberg and Meta shareholders be about, potential Trump win? Is that all, smoke and mirrors, or, could that actually be a problem for Meta? Any thoughts there?
Yeah, I think Meta's doing great, and they're front and center in AI. And so Trump and Zuck don't get along, but I don't think it's a big deal for, if anything. I think Meta's doing great, and if Meta's weak on the election, I would think you would buy it. I think this stuff gets played up As if, I mean, Trump isn't Putin, right? He's not putting a contract out on Zuck. So uh, I think Meta is going to do fine.
I don't know if you ask Time Warner, if you ask Time Warner shareholders from, from back, remember how he came after them in the last administration, almost tried to break up the deal after it had closed.
Yeah.
So maybe I have some PTSD over that, but I agree with you that Meta's doing great. And,
yeah, I think it's
but it's weakened the last few days ahead of a good quarter. So I was just like, is this potentially a problem?
Yeah,
You think not?
I'm a little bit like what Jeff is about the election. I think, people are playing it, making moves. I'm trying to focus on things that are not, I'm not smart enough to call the election and what's going to benefit and everything else. So I'm just focusing on what I know or what I think I know and how that's going to play out. So, but I mean, AI is going to keep making advances. Meta's going to keep on doing well. So, yeah.
I mean, good luck stopping AI or our
obesity
drugs. They're going to drag them out of our cold, dead syringes, but it just will never happen. We
exactly
like the idea of being thin with a drug.
So I've been busy the last couple days on, first on HIMSS. Yesterday, we had some big news with Novo filing some information with the FDA, trying to make a clever runaround to say, you shouldn't have semaglutide on the shortage list because it's too hard to make. So put it on a list of drugs that cannot be compounded. And what they're making an argument is that when they make semaglutide, they use a yeast process, and everyone else is doing a synthetic process, and ours has been tested. We know it works, and everything else, people are just throwing stuff against the wall. There's a lot of stuff that's dangerous. And so you go through this case, and Novo is saying, look at all these adverse events. There's been 10 deaths, and the FDA should be focused on safety. And really, this big compounded GLP-1 thing is a huge embarrassment for the FDA because you have all these products that are not FDA approved on the market. And Novo is making the argument, we can flip to the next slide, where, since the compounded semaglutide is all dosed in vials, that it's very easy for a consumer to make a mistake. They could read the instructions about a 5 milligram dose and they might give themselves 50. And, the Novo Nordisk, they're doing pens, so it's very easy and people won't make mistakes. And so why I think this is important is, HIMSS is reporting on November 4th. I think they're going to beat the numbers, but I think they're going to really beat because the GLP business is booming. But I think this is hard to bet on the stock because the FDA and Novo is going to keep on trying to crack down on this GLP-1 compounded products. And so to me, you can't put a multiple on it. And if they're beating because of this, that's it's hard to bet on it because it's just not going to be on the market that long. Novo is going to keep on suing, and the FDA is going to be looking for a reason to pull these products off the market. So that's what I've been focused on.
I gotta go to David and see if he has any thoughts on this because we've had a running bull bear thing here. What are your thoughts here, David, on what Russell just said?
Well, I wanted to ask Russell. So you would short it today if you didn't have a position?
Well, I'm short it, so by definition, I would short it today, right? I mean,
okay.
the market
so the subs that are watching and potential subs, just remember a couple weeks ago, I said, hey, listen, we finished this discussion. It's $17.21. Let's see if it's above or below that when they report. Now you're saying they're going to report a good quarter. I generally like owning companies that report good quarters. It's, I don't know what is $3.60 on 17.21. I don't know. That's 20%. To make that in a couple weeks, I'm good with that.
Okay.
My view is that Russell and I agree that the GLP-1 is a risky thing for them to do. They did it. They're gaining customers for other parts of their business. Whether it goes away or not, I really don't care. They were growing 35% a quarter over quarter without GLP-1s. I don't even know if this quarter is going to be as great as Russell expects. I think they should have a good quarter because of the base business, but they probably spent a lot launching this too. And it wasn't launched in all the states. It's not in 50 states yet. So again, I just think that will I make the same bet at 2182 in the earnings call? I think it will be higher. Would I bet the farm on a small, volatile stock? No, but I own it. I think it's going to be higher than 2185 in a week.
It seems like a good business to me are those chewable erection drugs. It seems like America's going to want those things, and that's kind of going to be his bread and butter. Again, we like our drugs. We're not going to give them back. We're not going to give gambling back. All kinds of things that are bad for Americans that we should quit. We're just not going to do them. So good luck shutting down Hims. America's desire to get fat drugs and chewable erection pills. Perfect. I like that side of the business, to be honest, just as a societal trend.
You can even mix them into your chips. Mix them in, and you get two things at once.
Talk about a compound. I mean, it's you just throw all that into a mix. It's a dream product, and that's probably it's a $60 stock overnight.
Well, it's going to be interesting. I think if the FDA
Russell.
Yeah. Yes, Berna.
Oh, I was just, we could go on and on about this, and I need to move on and just get your thoughts on Enphase. I want to know if you covered your short. You came on a couple of days ago and told us that this was going to suck. Earnings were going to suck, and they did, and the stock was down a lot. And so, is this trade over, or are you still there?
No, I'm staying short. And to me, the issue is all about Tesla's entry with the Powerwall 3. And when you look at what's happening, let's compare what an Enphase system costs to what a Powerwall system costs, right? And so there's massive savings in a market where consumers and installers are trying to get the cost down. So right off the bat, there's almost $8,000 of savings, and the Tesla Powerwall is easier to install. So it's probably more like $9,000 or $10,000 worth of savings. So the savings are huge. On the Enphase call, the CEO was asked, well, wait a minute. When I make my channel checks, I'm seeing Powerwall 3 gain massive share. It seems like you guys are just resigned to losing share. What are you going to do? And then let's turn to the next slide. And so the CEO answered and said, well, when I look at the data, we're not losing share, we're holding share. And so what I've done is I've looked at what's happening in California, and this data is publicly available on some databases. You have to sort it out. But when I look at what's happened with market share trends, is the blue line is Enphase's market share, and the orange bar is the Powerwall 3. So what we've seen in just a few months is Enphase's share in California has gone from 48 down to 27, and the Powerwall 3 is just exploding. It's cheaper. It has a better brand name. You sit down at the kitchen table and you say, would you like a Tesla Powerwall to power your home? And consumers are saying yes. And so the market share shift is just happening right now. If you look at Enphase's numbers, they made $50 million in the quarter, a $200 million run rate, and Powerwall 3 is just kicking their butt. So Enphase is going to have to start cutting prices. And I think we're going to be shocked at how low the stock goes. The problems are really just starting. Now, this is just California, but when you get out of the state, you go down to like a Georgia or a Florida, and right now, developers are saying you can put solar panels on your house and just have panels, or you can put a Tesla system in and get a backup, backup power in your house for just another $5,000. So the Powerwall is a very compelling product, and it's dramatically changing the market. Bulls are focused on that microinverters are a better technology and that this is the future. But the cost savings are too much, and all of these products work well, and now it's about the battery. So I am staying negative on Enphase.
Got it. Well, congratulations. It's a trade that's certainly working so far. Anything else that you wanted to get to today?
The last thing I wanted to mention was, everyone's talking about Tesla. And I felt like he did a rope-a-dope on the AI event with making it kind of flashy and like, oh, is this silly? And people reacted too negatively to it. But what we were seeing with Tesla is dramatic margin expansion. And this shouldn't surprise us. Lithium prices have collapsed. All the supply chains have reversed. But what really got the stock going was Elon saying that he's going to grow his volumes next year. Maybe it's going to be 30% of parting. So the whole market is turning. And he says the future is electric and it's autonomous. And I think he's right on those two fronts. And so I think we're going to start to see, as the traditional OEMs have pulled back from EVs, that now we could see a mad scramble back to EVs to get back into this game. We're going to look out a couple of years, and an EV is going to be cheaper to buy and cheaper to run than an internal combustion engine car. That is a fact of the future. And so I'm sitting there watching stocks like onsemi and perhaps Wolfspeed to see that these stocks are way beaten down, and any type of interest in EVs and a scramble back to this can make these some pretty interesting investments.
Yeah. It's kind of interesting how, it was all about the move to EV, then it, kind of died down, and now I think we're back. So, be interesting to see how the OEMs respond to this. Well, I think that, that's it for us today. Thanks for joining us. If you like what you heard today, there's more details on wallstreetbeats.com. Come visit us here. You can see our chats, see our research pieces. Thanks for joining. I'm Berna Barche, and we'll be back tomorrow with more.